Ford is a legendary U.S. automaker started by the legendary automaker Henry Ford several decades ago. But what's a fair price to pay for Ford stock today? That's the question I'm going to answer in this video by conducting a discounted cash flow analysis of Ford stock. I'm going to share with you precisely where I'm getting all the inputs so you can see for yourself if the numbers I'm using are accurate, too high, or too low. Without further ado, let's jump into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So 3 of the inputs I need is the market cap for Ford Motor Company at $38.7 billion, the company's total long-term debt at $157 billion, and its short-term investments and cash balance of $37 billion. I also need the average number of diluted shares outstanding at 4.018 billion. And I need the company's beta, which according to Yahoo Finance is 1.64. Furthermore, I need to evaluate the company's free cash flow expectations over the next few years, and according to Wall Street analysts following Ford stock, they expect the company to generate $8.3 billion in free cash flow in 2024, $6.3 billion in 2025, $7.37 billion in 2026, and $5.74 billion in 2027. All right, so now that we have all of the inputs we need, we can jump into our financial model valuing Ford stock. So let me draw your attention here to 2024, $8.28 billion in free cash flow expected, rising all the way to $5.74 billion in 2027. I should say declining to $5.74 billion in 2027. You might be asking, why is Ford's free cash flow declining? Two factors primarily. Number one, the company is losing significant market share in China, where local producers are taking significant market share because of lower priced models and better options on electric vehicles. Secondly, electric vehicles. Ford is being essentially forced by the government to produce electric vehicles that consumers don't really want. And so Ford is having to produce these vehicles, sell them at lower prices than the company can manufacture them at, and that's causing negatives in free cash flow. To make matters worse, those electric vehicles are taking sales away from more profitable internal combustion engine models the company sells. The transition to electric vehicles has not been good for Ford and doesn't expect to be so anytime in the near future. The company is investing billions of dollars in this transition with an uncertain outcome. And according to the Wall Street analysts that are following Ford, they expect its free cash flow to decline over the next few years. Following that, I'm going to forecast that its free cash flow will begin increasing again in 2028. The justification for my forecast for increasing free cash flow following 2027 is that most of the company's investments in electric vehicles will be behind it, and it will begin to capitalize on those investments. Its production capacity will be increased, its model selection will be increased, the production cost per unit will be lower if they can produce at higher scale. And so for those reasons, I forecast that its free cash flow will begin rising at about 7.5% per year starting in 2028, and that will continue until 2034, from which point I forecast the company's free cash flow will grow at a 5% rate longer term. These might be, if I was to estimate if this forecast is optimistic or pessimistic, I would lean on suggesting this forecast is more optimistic than pessimistic, but I'll let you be the judge of that. So these are all free cash flows expected in the future, but we need to get these values for today, the present value of these cash flows. And to do that, we need a discount rate. The discount rate I'm using for Ford is 9.72%, the cost of debt of 8.5%, cost of equity at 14.6%, applying that 1.64 beta. Company has a total debt balance of $157 billion and a market cap of just $38.7 billion. So I'm giving them a target capital structure of 80% debt and 20% equity. So when I apply those discount rates to these cash flows, I get a present value of cash flows of 44 billion and a present value of the terminal value at 84 billion. Let me explain a little bit the terminal value. So here in the year 2034, I'm calculating the terminal value for Ford stock. And to calculate this, I take the free cash flow in year 2035 divided by the weighted average cost of capital minus the growth rate. This is a shortcut for forecasting free cash flows from 2035 to infinity. I could have forecast each year individually as I did from 2024 to 2034, but that would have been a more tedious calculation. And since I'm forecasting the long-term growth rate at a constant rate of 5% from that point onward, I can use the terminal value shortcut formula to arrive at that value. So 212 billion is the value at that point in time. And then the present value of that terminal value is $84 billion. Combined, the value of operations reaches $128 billion for Ford. When we add the cash and investment balance and subtract the debt balance, we get a value of equity of $8.4 billion. And when you divide the number of shares outstanding of 4 billion against the value of equity of 8 billion, you get an intrinsic value per share of $2.10. Ford's stock price currently trades at $9.74. So my calculation of Ford suggests that the stock is overvalued. Now, that doesn't mean the stock price is going to come down. I've said this before, when I have these wide dislocations between my calculation and the market price could remain overvalued forever, or it could come down and reach the intrinsic value. This intrinsic value is just what I would be willing to pay per share for Ford stock. So unless Ford stock drops to around $2 a share, I probably won't be buying Ford stock. But that doesn't mean other investors in the market won't be buying Ford stock, keeping the price elevated. So this is just my calculation for personal reference. In case I noticed Ford stock price crashing down, I can then come back and look at this reference and see if at the lower price, if it makes sense for me to dig a little deeper, to do more due diligence, to consider Ford as a potential addition to my portfolio. This is what this calculation is, just for my personal reference, my personal calculation of what these shares are worth. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.